We're going to get back to that currency story in a moment. But we have to show you this pop that we just saw in U.S. stocks. That is up and to the right if I've ever seen it. 237 points on the Dow when we were basically flat just moments ago. What's going on? The reaction seems to be to a headline breaking now saying that the United States is weighing the possibility of rolling back some of their China tariffs to try to calm the markets. This is according to the Wall Street Journal. This is their report hitting the tape, and then the move that we saw. So if the intention is here, and this turns out to be true, they want to calm the markets. Not only calming the markets, seems to be giving the markets a bit of juice to the upside. 230 some odd points. All right, this could play into the currency trade as well if the United States is willing to play a little nicer with China. So for that, we're joined now by Adam Button, the chief current analyst at ForexLive, to weigh in all this. Let's start with that, all right, because one of the big tensions we've seen, obviously, across a number of asset classes has been China and the United States. Now the Wall Street Journal is saying, well, maybe the U.S. will roll back some of their tariffs. Yeah, I mean, this is unambiguously good news. If we're 6 weeks away from the U.S.'s deadline for a deal with China, and, you know, we've seen progress, and markets have appreciated that progress, and this is really, if true, a concrete sign that they're headed towards a deal, or that America doesn't want to squeeze anymore, and probably even in the bigger picture that Trump wants a deal because he can't stand to see the market falling like it has been. So if we did end up with that in terms of the global economy, because we're worried about global economic strength right now. We see it play it across the currency trade, the equity trade. If we could actually get past that and China and the United States could get back to perhaps not loving each other, but not hating each other as much. How does this play through the different currencies? Well, I think the flip side of this deal is that China had to acquiesce to something to make it happen. And what we've seen from China in the last month is some dire economic data. To start the week, we had extremely poor trade data out of China. Shockingly poor. And this Monday, which is going to be Sunday night for us here in North America, there is industrial production, retail sales, and GDP numbers out of China. And my fear is that those are going to be very poor as well. So you might have China rolling over here as part of the story. And the fear is, well, if that economy really slows, and if it's something beyond this trade spat, well, you really do have something to worry about on really every front. Now, we showed the equity market reaction and the Dow shooting higher. If we could take a look at the trade-weighted U.S. Buck, the Bloomberg Spot U.S. Index, it actually pulled back on the news. Not a huge amount, but it did pull back. Is this the kind of move you'd expect? Yeah, it is. You have the risk trade, right? So something like the Canadian dollar will do better, the Australian dollar will do better, the U.S. dollar might do a little better against the yen. But, you know, this global growth story, the U.S. is not leading that. They've already raised rates, so if Canada, others can catch up, then you'll start to see a little bit of weakness in the U.S. dollar. And like you'd imagine, if the trade war ends, the prices of commodities are going to go up, the Canadian dollar is going to do much better. All right, so let's talk about the Canadian dollar really ripping out of the gate in 2019, jumped about 2 cents, and now it's been a bit of a sideways trade since then. There's probably a lot of Canadians who like to vacation south of the border once the cold really takes hold on us, and it is in large parts of the country. Can they expect much better than this out of the loonie? I think it's going to be a decent year for the Canadian dollar. I mean, there's a lot that went wrong at the end of last year. Oil's doing better. We've got a bit of Canadian oil weakness today, but it was really beaten down towards the end of the year. And just on a rebound, it can get up a few cents. What I worry about is the long term and getting back to 80 or 83 cents. And I just don't believe we're going to get there in the next decade because the backdrop is so poor in Canada. Brexit. All week we've been taking a look at the British pound. There is no shortage of drama in the British Parliament today. It almost feels like a little bit of a breather, although nothing really has been resolved at all. Do currency traders, the smart ones, just stay away from the pound for the time being? I mean, the headlines and the rumors and the chatter and the speculation is 24/7 in the pound. The moves we saw earlier this week, 2 cents up, 2 cents down, really on next to nothing at all. But it has been creeping higher in the past few days. And if you look at the possible outcomes, it's a deal with Labour, so they passed this current Brexit deal. You have a number of different ways out, an election, you have Theresa May resigning, you have an extension of Article 50. All of these are going to be good headlines for the pound and probably for European growth and market sentiment in general. So that's building, albeit slowly and very cautiously, but you can see it starting to creep into the market that this isn't going to be a disaster, no Brexit exit. Yeah, because it seems that Theresa May saying after, of course, surviving that confidence motion the day after that her plan was so soundly defeated, saying, well, now I'm willing to talk with the other parties. But the other parties, they all seem to be singing the same tune. For the most part, we will not accept any scenario where there is a no-deal Brexit. Of course, because that's the worst-case scenario, that they just drop out of the European Union and say, well, let's see what happens now.
But if you're her, you need to keep that on the table, because you say, okay, either you take this deal or we're crashing out into disaster. And so that's kind of the gun to the head that she wants to use to hammer this through. And if they take that away from her, her own party is turning on her. So it's this terrible quagmire that they've been stuck in, and you can look at it from a million different ways, and there is really no easy way out for anyone, but all that's already priced in, so at some point there's got to be some solution, and it will be positive.
It feels like the tagline of almost every major political story right now. There is no easy way out for anyone.
That's absolutely, I mean, it's America, the shutdown, I mean, there's no end to on the horizon to that.
Lots of drama. Thanks for joining us, Adam.
Thanks, Greg.
Adam Button is the Chief Currency Analyst at ForexLive.